Welcome to lecture 9 of business taxation. In this lecture, we are going to cover the topic of average relief. So moving towards the contents, we have been discussing the income tax ordinance, and within income tax ordinance, we have covered different aspects of the salary head. One of the aspect is average relief that is given on tax. So what is average relief? Now, what the government do is to encourage some kind of an activity within the public, within the masses. What they do is they give some relief in taxes. They say that if you are performing those specific types of activities, then you would have to pay lesser taxes. For example, if the government wants that people should start saving and they start investing in, let's just say, shares. So what they would do is any person who is owner of certain amount of shares, they would have to pay, let's just say, lesser taxes. So to achieve this benefit, what people would do is people would start buying shares. Obviously, beside other measures that the government would take to encourage people buy shares, this is one of the measure. It is not just the measure; it is one of the measure that the government would take. Similarly, let's just say the government want that people start investing in life insurance. They should buy life insurance uh, for themselves. Similar kind of activities that the government want that people to perform, they give average relief on those activities. This is what we are going to discuss in this lecture. So there is average relief on investment in shares. Sukuk. Sukuk is a kind of, let's just say, bond, right? It is a debt instrument. On life insurance premium paid. Remember, if you buy life insurance, then you have to pay certain yearly or monthly premium on that. Uh, so this is covered in section 62. Then we have investment in health insurance. If someone is investing in health insurance, we are going to discuss each of these relief in detail. This is covered in section 62A, and then contribution to approved pension funds covered in section 63. So let's just start with investment in shares. So the main idea is that if someone is investing in shares, he would have a relief if the amount of relief allowed will be surrendered if the share is sold within 2 years. So if someone is buying the share and he want to have a relief, then he must keep in mind that he would have to hold these shares for 2 years. If he is going to sell these shares before 2 years, then the relief that he has got would have to be reimbursed to FBR. The amount of relief is limited to the actual payment or 2 million rupees or 20% of taxable income, whichever is less. So first, remember, we need to calculate the amount admissible for relief. This is the amount that is allowed for relief, right? It is not the amount of relief, it is not the amount by which we would have to pay lesser taxes, but it is the amount that is admissible for relief. And we would have a formula that we would input this amount into that formula, and that formula would give us the amount of relief that is allowed. Okay, so the relief is limited to the actual payment. So let's just say if you bought shares of 1 lakh rupees or 2 million or 20% of taxable income. Let's just say your yearly income is 1 million, right? So 20% of this yearly income would be 2 lakh rupees. So or 2 lakh rupees. So the amount admissible for relief, it is not the relief, the amount admissible for relief is the minimum of these three. So the minimum of these three amount is 1 lakh rupees. So we will get relief for this 1 lakh rupees. We would have examples on this. In case of both shares and sukuk and insurance premium, let's just say, remember I have mentioned in heading that it is investment in shares, but it also includes the investment in sukuk and life insurance premium. This is the first heading that we are discussing. So only one rebate will be given, whichever is higher. So if you have invested in shares and sukuk and insurance premium, you just have only one rebate rather than rebate or relief on all these amounts. If you sold the shares before 1 year, it is related to this one, then there would be no rebate. Remember, let's just say you sold the share after 1 year but before 2 year. So let's just say you sold the share in 15 months. Then whatever rebate you got, you would have to reimburse it, you'd have to resubmit it to the FBR. But in case if you hold it just for 9 months, let's just say if it is less than 1 year, then there would be no relief at all. We would first discuss the rules of all these three headings and then we would move towards the example. Investment in health insurance. If you have invested in health insurance, then the rule is that the amount eligible for tax credit will be restricted to 5% of taxable income or rupees 1,50,000, whichever is less. So if your taxable income is 1 million, again following the previous example, then 5% of this would be 50,000 rupees, right? So this amount or 1,50,000 rupees, whichever is less, so in this case 50,000 is less, we would have this amount would be admissible for relief. And last one is the contribution to approved pension funds. The amount eligible for relief is restricted to 20% of taxable income. Whatever your taxable income is, the amount admissible for relief is 20% of your taxable income. So let us say we have invested 1 lakh, our income, our taxable income is 1 million. So 20% of uh, 20% of taxable income is 2 lakh rupees. This 2 lakh rupees is the maximum amount that is admissible for tax relief under approved pension fund. We would have this formula which would give us the amount of relief, the amount by which we would have to pay lesser taxes, the amount which we would deduct from our taxes. It would be calculated as gross tax, whatever tax we have calculated, divided by taxable income into amount admissible for average relief. This is what we have calculated from all these rules that we have discussed in previous 3 slides. So let's have an example and then it would be more understandable. Salary is 1,95,000 per month. Special pay is 25,000. This is again taxable. Bonus for the year is 5,85,000. Conveyance allowance 15,000 per month. Free accommodation of the employer, and if he had not been provided free accommodation, he would have got 4,20,000. Medical expenses reimbursed. This have nothing to do with taxes. So zakat paid, then legal expenses, then again this is not related. Amount paid to approved pension fund and shares in listed companies. So let's just solve this example and let's see how this average tax relief would work. Okay, so starting with the basic salary. So the basic salary is 1,95,000 per month. So the total amount would be 23,40,000. Then we have bonus. I remember bonus was the amount 5,85,000 for the year. So 5,85,000. Then special pay was 25,000 per month. So we had 12 months, so it would be 3 lakh. Value of free accommodation. So remember, accommodation, we had this rule of 45% of the salary. So 45% of the minimum of type scale or the basic pay, and this 45% would be of this amount would be 1053 triple zero. So this would be 1,053,000. And then the amount that we would paid if we were not paid, we were not given free accommodation, that would be 44,20,000. So whichever is higher, right, the higher amount is this one. So this would be taxable. Then we would have medical expense. So this is not taxable, right? This is reimbursed, right? It isn't medical allowance. So our total income is, it is 44,58,000. We would less the deductions, and that would be zakat. In this case it was 48,000. So the total amount that is taxable, or our taxable income, is 44,10,000. This is our taxable income. So you can go back to previous lectures and check the slab that it falls in. So in case of this, we would have to pay tax on 40 lakh, right? That would be 2,90,000, and then tax on the excess amount, which is 4,10,000, is 20%. This would turn out to be 82,000. If we add these, we get 372. So we would have to pay 3,72,000. This is our tax. Now what we need to do is we need to calculate the amount admissible for average relief. This would be the heading. Firstly, because this person contributed to the approved pension fund, so the maximum limit in case of approved pension fund is, what was the rule? Let's just go back. It was 20% of taxable income. So 20% of taxable income, right? So our taxable income is 44,10,000. and this would turn out to be 8 lakh 20,000, sorry, 2,000, 8 lakh 82,000. And the actual amount that was paid to approved pension fund was 1 lakh and 90,000. So remember, this is the maximum limit. It is not the relief that would actually be provided, it is the maximum limit. So the actual amount that was spent was 1 lakh 90,000. So this is amount admissible for relief. If let's just say he spent 9 lakh rupees, he contributed 9 lakh rupees to approved pension fund, then the maximum amount would have been 8 lakh 82,000. We would write 8 lakh 82,000 over here. But because the amount that he actually spent was 1 lakh 90,000, which is less than the allowed limit, so we would just write the amount that is allowed. Okay, so this is 1 lakh 90,000, and then he had invested in shares. This is for pension. Okay, because he had invested in shares, he had purchased shares of 10 lakh rupees. The rule is 20% of taxable income. So 20% of, again, 44 lakh. This would again be 8 lakh 82,000, right? So this is the maximum limit that is allowed. If we go back to that rule regarding shares, it says that the actual amount, or 20 million, or 20%, whichever is lesser. So in this case, the actual amount, or actual amount is, so this is 20%, then the actual amount, which is 1 million, and then the amount of 2 million which had been given in the rule. Which of this amount is lesser? Obviously this amount, so this is admissible for average tax relief. So if we add these amounts, the two amounts that we are getting from the shares and from the pension fund, that would turn out to be 10 lakh 72,000 rupees. This is called amount admissible for tax relief. Okay, so once we have found this amount, then we would use that formula of average relief is equal to gross tax divided by taxable income into amount admissible for average relief, right? This is the formula that we saw in previous slide. So the taxable income is 4 lakh 10,000, and the gross tax was this amount, 3 lakh 72,000, and the amount admissible is 1072,000. The amount that we would get from this calculation is 1,32,604. This is the amount that we would deduct from tax. This is our relief, right? So let's move back to previous slide. The tax we had to pay was 3,72,000. We would less the average relief, which is 132,604. So the actual tax that we have to pay is 239,396. Okay, so this is the tax that we would pay rather than this tax amount. Okay, let me clear this slide. There is another example. It is similar to the previous one. Uh, so what I would suggest that you go through this example yourself. There is just one thing that is additional in this example is golden handshake. Remember, if you are familiar with golden handshake, what normally companies do is, or government do is, that when they are going to privatize certain institution, let's just say nowadays they are privatizing PIA. So they, what they would do is they would want to lessen the number of employees, right, so that their cost is decreased. And that what they do is they give certain handsome amount to its current employees so that they can resign from that job. This is what is called golden handshake. Previously, it had been given to multiple organization employees. For example, banks were privatized in 90s or in after in late 90s. So golden handshake were given to those employees. It is a lump sum amount that is given so that the employee can retire. He would not be paid pension, right? So this is to lessen the pension burden on the government or organization. Okay, this is what we have never discussed in our previous examples or slides. This is basically related to fixed tax regime. Remember, in our previous lecture, lecture number 8, we discussed fixed tax regime. So the rule is that we would not have to pay income tax on this golden handshake. Rather, we would have to pay fixed tax regime on this golden handshake, and the amount or the percentage that would be paid is the percentage of average of last 3 years. Last 3 years. So let's just say in first year we paid 10%. Let's just say this is 2020. We are calculating this amount for 2020, and this specific individual paid different percentage of taxes in previous years. Let's just say in 2019 he paid 10%. In 18 he paid 20%. Then again in 17 he paid 10% of taxes. Then the average, the sum of all these and divided by 3 would be the average of the previous 3 years taxes. This is the percentage that he would have to pay tax on this amount. The average rate of previous 3 years is already given. It is 16% in this specific case. The rest of the example is same as previous. There is one more example. Again, this is similar to previous examples. This senior post allowance is a new thing, but this is all taxable. Dividend received is again fixed tax regime, so this would be covered under the fixed tax regime. If you remember, if the person is filer, then he would have to pay 15%. If the person is not a filer, then he would have to pay double the amount. Okay, this is the question that you can go through. That's it for now, and we would get back to a new topic in the next lecture.